Hello, everyone. Good morning, good afternoon. Today it's just a solo show. I am solo leveling. Very good show for those that don't know what it is. It's an animated show, anime show. Very, very good. Anyways, we're back. Stock market is back. Quick live stream an hour before the market opens. We will look at the pre-market. There are some macro things happening right now. We're going to have a look at the stocks as well. It's a new month, so later today I will have the usual 4 stocks I'm watching or maybe buying already in the month of September. First order of business, of course, is good morning to everyone. Roberto in the house here. Good morning from Austin, Texas. Gotta say, I've never seen this many Waymos out in the streets. Incredible for Google. Well, I've never seen a Waymo in my life, so I guess that's a good thing. Do let me know if you try it out. Try it out. Waymos, maybe Tesla if you can, or maybe if it's still invite only, then I guess you have to find someone that does get that invite. Good morning to Joseph, Renato, TC, Eddie. Stock market crash incoming. I mean, would I be mad if we get an opportunity to buy a lot of shares at lower prices? Probably not. Like if we do get some flash crashes, again, like the DeepSeek drama, maybe not the April one, because April was literally a decent crash because the market was just freaking out about the tariffs, but I wouldn't mind, right? I wouldn't mind if September, and I'll pull it up in a second, again, why September is the worst month of the year, historically on average. We're going to have a look at all of that. Josh here saying, in French, salut couch, c'est rouge, meaning hello couch, it is red. Basically pre-market, we are cooked. Everything down today. Yeah, but are we really cooked? Are we really cooked? I think we are back to prices not seen since, I think, a week and a half, 2 weeks or so ago. But let's see how cooked we are. Let's pull up some pre-market data. Yeah, first thing I am seeing here is we are slowly but surely getting cooked pre-market. Let's see, share the screen. Voila. So, and again, good morning to everyone. Really appreciate it. You joining me this morning. So, the 10-year sits at 4.3, and as you can see here, breaking Dow futures. I know you can't see it because I am too zoomed out, too zoomed in, too zoomed out, depending on how this thing works. But pre-market, here we go, pre-market. Well, let me actually rearrange this because this doesn't make much sense. Pre-market, we are down 0.7, 1.2% or so. I don't know why this is extremely zoomed in. Let's see if this is better. Maybe, but yeah, it does seem like a lot of things are down. NIO did report. For those that are interested, NIO did report its quarterly figures before the market opens. Let's see what we have here. Maybe this will work. Aha. Okay, this is a bit better. So We are now down, as you can see, Dow Jones down over 300 points, 0.73%, basically negative. S&P down 1%, Nasdaq down 1.24%. We start September amid new tariff uncertainty, jumping bond yields. I think it's not just in the United States, it's across the board. So we can see this right here. Japan is down a tiny bit. If we look at euro dollar, still at 1.16. European markets were down, very red, right? Very red here across the board. Asian markets also mostly down. Nikkei was actually green, 0.29%. But yeah, it does seem like we are probably going to start off September with this right here. Well, September effect. Why is September historically the worst month for the stock market? I talked about this a couple of weeks back, and historically, this is basically what has happened. Now, again, is it going to happen again this time? Remains to be seen, because although historically August is also not the greatest of months, even though you can clearly see right here that on average, August has been returning decent amounts. September is by far the worst month. Okay, September is by far the worst month. This is the S&P 500 average monthly return since 1928. September down 1.2%. And if you didn't notice, we are already in September. We are September 2nd, so second day of school. If you're still going to school, or if you have sent your kids to school and now you're basically free throughout the day, well, you're basically working, so maybe not that free. But there are here a couple of theories as to why this has happened historically. By the way, just because it happened before doesn't mean it's going to happen again. Plus, this is the average. So sometimes it gets worse, sometimes it's better. We'll see what happens in 2025. And to me, this just screams opportunity, right? If the market in September is down so much historically, but then October, November, December, January, we're up a decent amount. February, a tiny pullback, but then again, we're back in it. March, April. So why wouldn't I buy here, right? Why wouldn't investors buy in September? Just makes a lot of sense, right? If historically this is the worst month, and then all of the other months are basically months where we're green, on average, of course. All of this is on average. And so the theory behind all of this is as follows: portfolio rebalancing and tax loss selling. Although tax loss harvesting can happen September, October, November, December, I mean, you're probably going to see this excuse being used for the next 4 months, right? Every time, why are we now a week red? Tax loss harvesting. That's why. Where we hear this time and time again each and every year. But okay, this is theory number 1. Theory number 2, behavioral biases and investor psychology. So the post-summer reality check and the end of summer optimism. I don't know about you, but every headline out there for quite a while wasn't that optimistic. You can always find optimistic people like Tom Lee, for example, but theory number 2 to me is a quite weak one. And by the way, if we do get a major September pullback, what are we buying? Let me know in the chat, and we'll go and have a look at those stocks in a bit. Theory number 3, economic factors and business cycles. Now, in this case, I do think that the macro aspect of things can definitely be a reason. The macro aspect of things can definitely be a reason, whether or not we're getting a rate cut, right, in September, 25 basis points, 50 basis points, who knows? Probably 25, but I mean, you never know. You never know what might happen. I do think that can have an impact on the stock market. Then theory number 4, the back to school effect. I mean, reduced consumer spending, business cycle shifts. Okay, but I don't think this is really such a big theory that can affect these types of results, but fine. The last one is definitely one where I think, and I've said it before, I think this makes the most sense. Well, other than the macro stuff, the self-fulfilling prophecy, right? If everybody knows, nobody knows. Everybody thinks he knows that September is a bad month. So if everybody thinks that tomorrow is going to be a a bad day, then you're all going to prepare for a bad day. And maybe it's going to be a bad day because everybody thinks it's going to be a bad day. And so I do think that theory number 5 here can make a lot of sense. Everybody trying to protect their portfolio. So you are selling and trimming and whatnot. And that selling and trimming across the board leads to, well, a huge sell-off. Could this be happening? Yeah, maybe, especially since we are still very close to all-time highs. So this thing can happen. These things can happen. What do we have? And by the way, I mean, Friday, let me pull up the heat map from Friday, because Friday was definitely not a great day, right, for the stock market. Let's see. Friday was this, right? We've seen some, I don't know why I'm always getting this, leave me alone. So Friday was not the greatest day unless you hold Google like we do, right? Google holding strong. United Health was up also 2.5%, but Nvidia down 3.3, AMD 3.5, Meta down 1.6, Tesla down 3.5 as well. Broadcom, which reports earnings later this week, 3.6. Friday was not the greatest of days. Let's see what people want to buy if we do see a pullback. We've got some AMD right here, Palantir, and Nvidia. SoFi, yeah, I mean, if SoFi has a decent pullback, even if it's a big position for me, I think I could definitely buy more. Iron, I would love to buy more Iron, which is Iris Energy. For those that don't know, that's Iron. There'll be a sponsor for the casino at the All In Summit, which I found quite strange. Something got in my eyes, but that's good for visibility. So yeah, Iron, I would love to get more shares of that. More Palantir, towards, I had a base at 120. Okay, I mean, I don't know if you're going to see a 120, but who knows? More Google, Nvidia, Marvell. If it goes down more, Marvell got completely crushed. Was down 18.6% on Friday. Doubling my Siemens stock if it does drop more. That's a European company, German company. More AMD and SoFi. Fubo TV. That's a name I haven't seen in a long time. Maybe we'll have a check on that. So lots of Nebius, CoreWeave, SoFi, Nvidia, Marvell, Fortinet, lots of the usual names. And it makes sense. It makes total sense, because why not, right? You already own those names. You want to own more of those names. And so if it becomes cheaper, I'm not selling. I will just buy more because I want more of these companies in my portfolio, more shares of these companies in my portfolio, which makes a lot of sense. The end goal is not to have I want the best cost basis possible, right? I've seen people today still with an average of $7 in Palantir or $10 in Palantir. That means to me that they've never bought since $7, which is quite strange, right? Don't you want to have more shares? Or do you just want to focus on that $7, $8, $10 cost basis? Of course, if you put $1 million at $7, then you're like, you know what? Screw it, I don't need more shares. But for those that did not put $1 million at $7 to $10 or so, why didn't you average up? Right? That's the thing. That's something that also I had to learn throughout the years. Averaging up is fine, right? Averaging up is fine. At the end, I want as many shares as possible of that company. Of course, if I can do it at a lower cost basis, that's great. But I'm not focused anymore on Rocket Lab, for example. Rocket Lab, my first position was under $5, right? 4.4 or something like that. For the longest time, I was like, you know what? 4.4, that's such a great average. But I should have added at 10, should have added at 15. I did add at, I think, $16 or $18 or so. Why? Because why not? I want more shares of that company. It just makes more sense. I did buy more in, what was it, $40 or so, $41 or so, not so long ago. The end goal here is to have the most amount of shares possible at, of course, a reasonable price. Right? Buying at all-time highs for the sake of buying and adding more shares sometimes will not make much sense because it's just overstretched, overvalued, expensive, all the names out there. It just, yeah, to me, it just makes more sense right now. Symbiotic is a name I will cover pretty soon in a video about robotics and drones, working on that, because I know about a lot of people have been asking me about Ondas. And by the way, I did talk about Ondas late last year, under $1. Just saying, because it is at $5 or $4 or so right now. Quick good morning here. Good morning to you as well. What happened with, well, I don't know. I was told this was going to happen at the end of August. We're now in September, so nothing, and yet we are at all-time highs with Google, or quite close to it. So we'll see what happens with that. We do have a lot of people here talking about Bitmine. I'm looking for some BMNR. Bitmine did have something released today, basically an update on the amount of Ethereum that they do own, because they did buy a little bit more. So let's have a look at that. And I mean, you know my opinion on all of it. I did a video about that, explained the crypto treasury. It's on the channel. So they now have 1.86 million Ethereum, up from 1.79 on August 27. They still have 192 Bitcoin and $635 million of unencumbered cash. So that's what they have right now. So Bitmine crypto plus cash is at close to $9 billion. I do believe that the stock is trading at less than $8 billion at the moment. Well, the company is trading at less than $8 billion at the moment. Could be very interesting. Unless, of course, we have a huge sell-off also in Ethereum and crypto, and then yes, the value, of course, does come down. The fundamentals need, yeah, of course, but that's why I'm saying, if the business does become better, there is no reason why it shouldn't average up. Of course, like I said, just buying when it's higher just for the sake of buying when it's higher doesn't make much sense, because then you'll be buying overvalued, super expensive shares. But if the company continues to grow and does what it should be doing, then I see no reason why you should not be buying shares. And especially, I go back to the Palantir example. Those with, again, single digits or low double digits average, I don't understand why you did not buy from $10 up to $150. Okay, I can understand why you didn't buy at 150 and all of that, but you still had more time to accumulate more shares along the way. Is the pre-market red because of, yeah, it's again, tariffs, jitters, and all of that, tariffs uncertainty. We're still not out of this tariff situation, right? I think we still have that China extension. We're still waiting for other deals. And so still some uncertainty around that, but we've just had the earnings season, right? You had the chance to look at what the companies did for the last 3 months and listen to what management said for the next 3 months, maybe the next 6 months or so, their guidance, and have an opinion on the matter, and not just focus on macro. You're not buying macro, you're buying companies. Of course, macro can impact those companies, but I would still trust a company's management more than economists. Because if economists really knew what they were doing, some of them know, but a lot of them that go on TV, if they really knew what they were doing, they would not be talking heads on TV. It's like the people that sell courses about how to become rich. If you know how to become rich, you don't have to sell courses. If you're selling courses, then you're getting rich because you're selling courses to people that think that you know how to get rich. It's really not that difficult. What am I looking to buy? Let me actually pull up and I'll do a specific video about that, because I know not everyone joins the live stream, and that's fine. What am I looking to buy? I'm not saying PayPal. Because I do have my options now with PayPal, but I am looking to buy more Nebius. I'm looking to buy more Nebius if, of course, we do get back maybe in the 50s, because there is that gap here from the earnings jump. I don't know if we will. I don't know if we will, but I'll be ready. I'll be ready to buy more if we do get back into the 50s. Would be a great gift for me. And again, with Nebius, I'm definitely going to average up. Iron, like I said at the start, would love it. Would love it if we go back pre-earnings and I get the opportunity to buy a little bit more shares. And all of that does not have to happen tomorrow, next week, or whatnot. I have time. I'm just thinking out loud, and just laying down my plans. Oscar is another one here. If we can maybe go back into the $15 or so, that's also something on the watch list that could potentially turn on the buy list. Like I said, SoFi, again, I don't know how low we're going to go, and with this one, I have been averaging up and buying more and more. It's already become a quite decent position for me. So with this one, I do have a little bit more patience. Where is AMD? Where is AMD? Here. AMD is another one. AMD is another one where I said it with Jose as well. If we can get back in the 150s, maybe 140s or so, I'm probably going to buy more shares with AMD. We have been now for the last 2-3 weeks or so coming down a little bit after an insane rally, right? Super fast, or super fast, strong rally, back at $186. We're now a little bit under $160, so that becomes quite interesting. If we do get into the 140s or so. I'll start dollar cost averaging, right? With all of these positions, if we do go down and I own these companies already, then I'll just dollar cost average, and see where we go with that, because there's no point in buying everything at 150 and a day or two later worth at 140. No, you can buy one chunk at 150, the other chunk at 140, and then we'll see where the market goes from there. What else was there on my buy list? Maybe increase, because I do have a position now also in CoreWeave. So if I get the opportunity again to buy in the low 90s, I have my average at 9.91. My average is basically one time where I bought, so $91.91. If I can buy more at those prices, that's fine by me. And yeah, I think that's it for the moment. Oh, maybe I think someone commented Duolingo. If we do get back to the, let's say, 265s or so. I don't know if the market, well, I don't know. The markets did crush this stock definitely right now. Could be another good dollar cost average. So yeah, that's definitely one of the other names out there. But there is definitely a ranking. Nebius is at the top of the ranking of me wanting to buy more shares, and then the rest will follow depending on how fast things go down. For the same price, we don't really go down that much, and we're back at prices that we've not seen since Thursday or Wednesday last week. So I don't know what the market will do, but I will be prepared. I will be prepared for whatever comes next, because I do have the cash right now on the side. So we'll see what happens. Google is now pre-market $208 from the 212.9, 213 that we had on Friday. Marco saying here, ruling on Alphabet case should be coming out this week. Apparently Labor Day was more important than yeah, I mean, it should be coming out this week. Should have come out last week and maybe 2 weeks ago as well. So we'll see. But the expected move from what we've seen is around 10% or so, depending on the ruling, right? Because again, in my opinion, I don't think that they will be forced to sell Chrome. But I do think there is a very, very high probability that they will not be able to make deals with the Apples and the Samsungs out there. So that means that's $26-25 billion that they can keep. Or maybe they'll work something out. I don't know. But yeah, once the deal is done, once the ruling is out, at least that thing is over. and the stock, and we can focus again. Well, we focused on the stock and the business anyways, um, but the market can stop talking about that. HIMS is another very interesting one. I don't own it, but I know a lot of you do. Because HIMS, like I said, if you zoom out and you look at the 200-day moving average, which is the blue line right here, it is usually respecting it, usually by most of the time. Yes, sometimes it does drop under it a little bit, but then it always rebounds. And today, well, right now, maybe you can see, maybe you cannot see because it is quite dark. But pre-market, we are now back under it a little bit. We were under it already Wednesday, August 20, under it for basically an hour or so. And then we did rebound. So whoever wants, I think HIMS right now at $41, $40 or so, I think could be a very interesting play. Is there a video on Iron? Yes, there is a video on the channel on Iron from a while ago. And then last week, Friday, I did cover Friday? I think Friday or Thursday, I did cover the earnings as well. Do you think it would be healthy to have some stocks from all geographies, including China, to average out risk? I have Alibaba, as you know. I have Alibaba. Alibaba is my China exposure right now. Does it really matter much that you have Alibaba because it's China, so you are averaging out risk? I don't think so. I don't think so. I have Alibaba just because I think the business is undervalued. Yes, it is a Chinese business as well, which is probably why it's not getting a premium from the market. But I don't know. I don't know if that's the way to think about just because of averaging risk. I own Mercado Libre, the local, because I like the Latin American market. And so I want to get exposure to it. So I got those companies. I didn't get those companies just because, oh, I don't want to be overly exposed to the US, or if you are owning European stocks, then whatever. No, I'm buying companies because I like the companies in those areas. Same with C Limited or Grab if you're looking for Southeast Asia, for example. It's not about averaging out risk. It's about maybe getting exposure to very good opportunities and good geographies, economies, so to say. Do you ever sell a stock simply because you see a better opportunity or have? Yes. No, definitely. And there is actually a very good clip from there is a very good clip from, I had to remember if it was from him or not, Peter Lynch. Peter Lynch talked about that. If you see, he sees 10 companies, 10 great stories, 10 companies, he's going to buy all 10. Okay, he's going to buy all 10 of them. But along the way, let's say, right, I bought Alibaba, I bought Nebius, I bought the local, Duolingo, Marvell, AMD, and Oscar, right? I bought all of them. But let's say along the way, one company does better than the other, one company is cheaper than the other, one company has better management than the other because management has maybe overinvested when they shouldn't, etc., etc. Then yes, then suddenly you take from one and you put it in the other. So from 10 companies, you suddenly only have 7 or 8 or 5. And so, yeah, I definitely am not married to my stocks. I am dating them, right? And yes, when you date, sometimes you dump. And so that's what happens here, right? I have no obligations to hold a stock just because I bought it. They have actually an obligation. The company has an obligation to me as a shareholder to perform well. And so if suddenly I see that management does not perform well, or the company is not doing what I thought it would be doing, then why should I hold it? Just because I bought it? No, I don't see it that way. I did it actually in the past, and I'll probably do it in the future, right? And I have companies, right? United Health, for example. United Health is in my portfolio because I do see value in it. It's not a company that I will own for the next 10, 15, 20 years or so, but it's a company I'd like to own right now, because I do think that this is an overreaction. And in a market where, yes, a lot of things are, let's say, overstretched or just stretched, overvalued, expensive, a name like this could could provide a nice balance, for example. But once I get a decent return of it, I'm out. Because again, the healthcare market, although I know more about it today than I did 2 months ago, it's not something I like to follow anyways. I like to follow tech. I like to follow AI stuff, fintech, things like that. Makes my investing life much easier. Could have also bought Build a Bear because I like these things as well, but I didn't. It's still on the watch list. But yeah, so no, I'm not married to any stocks. Victor here, thank you for the super chat. Thoughts on Nebius? I mean, I mean, if you've been listening what I said for the last 30 minutes, I will be buying Nebius if we do see a drop here. I already own Nebius. I'm very happy with that position, very happy with my average, but I don't care about the average. I want more shares. I want more shares of the company. And so hopefully it does go lower. Hopefully we do enter the realm of $50, $55 or so. Jose does not feel well today, so he's not coming on, and I don't think he will come on this week because he is in Florida, so probably enjoying time with his family. So it will be just me for you this week. But if the market does crash, then it's on him, not on me. Then it's on him. Let's see. Where is NVIDIA to see what they're doing? Hiding or hiding, but I think it's hiding pickles. It's a very, very nice name. Don't you think the data center stocks will be the absolute bag holder when the AI bubble explodes? Good question. Good question, because I've seen the conversation on X a lot, especially over the weekend, right? CoreWeave, Iron, Nebius, etc., etc., etc. Now, I am here pulling up NVIDIA on the screen because NVIDIA is the king out there of AI. But what does that mean? The AI bubble explodes. Does that mean that nobody uses GPUs and data centers anymore? Does that mean that we don't have to generate tokens anymore? Does that mean that we're done with training, we're done with inference? What does the AI bubble explode mean? I think for me, the AI bubble exploding means that blank checks will not be giving out to any or random AI startups out there. That doesn't mean that companies like Nebius or CoreWeave or Iron aren't going to generate billions of dollars in revenue, right? It's like saying, oh, remember when AWS started out? By the way, when AWS started out for Amazon, the market thought it was a very bad idea for them to invest so much in AWS, in cloud, stick to selling books, right? AWS started out. Do you think that along the way, people said, actually, you know what? Cloud is not going to become such a big deal in the future. The cloud bubble will explode and AWS, Amazon will get hit. Of course, along the way, maybe there were some slowdowns here and there. But today, I am pretty sure that there's quite a lot of there are quite a lot of companies that exist thanks to AWS, Azure, Google Cloud. Same thing with the AI bubble or this AI wave. It's very simple. It's either you believe in the AI wave, you believe that AI is going to be here to stay, or you don't. I think it's here to stay. Yes, I also think that some companies will go bankrupt or will just be acquired because we don't need them anymore. We don't need them anymore. But what we will need in the future for sure is still the data centers. You will still need data centers, right? I don't think there will come a time where suddenly, all that infrastructure, actually, we don't need it anymore. We don't need the energy. We don't need the GPUs. We don't need anything. I don't see that happening anytime soon or ever, to be honest. Yes, those that overbuild without contracts are maybe going to get screwed. But then again, if they build stuff, then probably someone will come in, buy the infrastructure, and they'll figure out how to monetize it. Remember, a core weave builds and expands based on future contracts, based on contracts that they know they're getting. So you're de-risking here the overbuilding part of it. So voila, that's it. Average dip buyer, market open. Yes, we've been doing this for 77 episodes. Where have you been? Where have you been, my friend? I see a lot of people talk about cake, and I've looked at it once. I've looked at Honest as well, and honestly, I got very bored with it. It's not exciting. Is there value to be seen there? Maybe, but not for me. Not for me. Not now, and not in the future either. Yeah, I mean, but again, be mindful of the Capex story, right? Because we're still in the Capex increasing quite quickly cycle. At one point, that will slow down. That's normal. At one point, it slowed down. But are we going to go from $100 billion for Amazon in Capex to zero? No, right? The thing here is that Capex might slow down, but Capex does not go to zero. And so each and every year, Capex is going to be in the hundreds of billions of dollars for those big companies combined. Yes, not all of it goes to GPUs, but a lot of it does go to infrastructure and infrastructure build-outs. Right? I think there is just a misunderstanding here that, Capex cycle is going to go down. Okay, yeah, growth rates are going to go down. That's normal. Just like NVIDIA cannot continue to grow 60, 80, 100% every single quarter for 3 years in a row. No. But that does not mean that it's not growing. It is still growing, just growing a little bit slower than before. That's it. Plus, don't forget that we're only 2.5 years into this whole AI thing. Right? ChatGPT came out at the end of 2022. We're now September 2025, 2.5 years later. Is this the end? Not at all. Not at all. This is just the beginning. This is just the beginning. Let's see what an AMD is doing. 157. Yeah, okay, still the same. For me, the risk in AI is that China wins the battle. I know you think this is not possible, but I see all the progress they've had in other markets, and I do not trash that opinion. Well, if I would, again, my opinion on China is way more optimistic than what you think that I think about China. I respect China way more than a lot of people, which is also why I have a position in Alibaba. I do plan on going to China in the next 12 months to actually see what the heck is going on there, because I am very impressed with the rate of progress. There's also a book that came out more recently that I highly recommend. Where is it? Did I put it in my Amazon.com cart or the other Amazon? Let's see. From Daniel Wang, I believe his name is. Let's see if I can find it. Yes, it's called Breakneck, China's Quest to Engineer the Future, from Dan Wang. It's a new book that came out. It's a very good one. And again, I think the US wins or is the more competitive out there because the US has the NVIDIAs, the Microsoft, the AWS, the Googles, and the Teslas, and the XAIs, OpenAI of the world. That doesn't mean that I don't see China becoming extremely, extremely competitive. They are already very competitive today in a lot of things, right? Quick. Thank you for actually bringing up the China thing right here, because someone did ask me this asked for me to look into, or what do I think about Xiaomi, the Chinese company. And I've known about this company since they came out with their phone. And since then they've become such a huge behemoth. It's incredibly impressive. So this is Xiaomi, the company. You might know the company from really their phones, right? They first came out with their phones a long, long time ago. Like, there is OnePlus, and all of the Chinese phones really started to come out. What was it? 10, 12 years ago, I believe. Now, today, there are like 10 companies, but they're all under the same umbrella and blah, blah, blah. But today they've got a smartphone arm, IoT, right? Tablet, laptops, smart glasses, air conditioning, and of course, cars, EVs. China has been moving extremely rapidly over the last 10 years. Over the last 10 years. Um, yes, economically, some of the things there are not working very well, right? That the lockdowns didn't help, etc., etc. Population, the fact that they had that one-child policy is probably going to crush them in the future, um, unless they do have a billion robots there doing everything. But when we talk about companies, companies have humans, companies have leadership, and these companies in China, especially the huge ones, the Huawei's, the Xiaomi, the BYDs, PopMart, for example, PopMart, Labubus, these people are incredibly capable. All of these companies are also highly, highly automated, right? There's a reason why Elon Musk talks about China a lot, about the highly competitiveness of China, the fact that the Shanghai mega gigafactory there is extremely automated, is very, very efficient. It's because China has that engineering mindset. In the West, unfortunately, especially more recently, we are more and more going into the direction of regulating this, regulating that. We need lawyers for this, we need lawyers for that. Again, in the book of that Dan Wang he talks about that big gap between engineering mindset and lawyer legal mindset, right? In the United States, lawyers, lawyers, lawyers. In China, a lot of the people in politics and whatnot have an engineering background. If you want to compete, if you want to build, if you want to do all of that, you need more. You need more engineers. You need more engineers and a bit less of the bureaucracy overlords, which is why you're seeing Europe where Europe is at the moment. But going back here to the Xiaomi thing, it's incredible how fast they've been growing. And Xiaomi does a lot of things these days, a lot of devices and whatnot. Yes, you might say that the quality might not be up to the standards of whatever comes out of Europe or the United States, but the price that you're paying for it is also much, much lower. Of course, in Dutch we say goedkoop is duurkoop, which means if you're buying something for cheap, it's getting expensive because you're probably going to have to buy it again and again and again because it breaks quite easily. But yeah, I mean, China is crushing it. China is also crushing industries with the fact that the cars are just much cheaper, especially if you're looking for EVs, right? There is a reason why Chinese brands are growing, well, like the BYDs, Xiaomi here now as well, growing very quickly. Very cool features and all of that. But the most important thing, this is something I've been saying for quite a while as a Tesla shareholder, Teslas are just too expensive, right? Teslas are too expensive for a lot of people. The Chinese companies understood that and they made more affordable models. You're going to say, yeah, but it's subsidized by the CCP. Yes, even if that's the case, which for a lot of them it is the case, they don't care. They don't care. Land and expand, right? Because they can do this for a long time. The German automakers cannot, right? The German automakers are going to lose. Once the German automakers are losing, which it's happening right now, or even the American ones, then suddenly it's only going to be the Chinese out there. And then you do not need the CCP's money because you will need a car, you buy a Chinese car. And I don't know about you, but in Europe, you can see a dozen of Chinese brands probably every single minute that you walk in the street, right? Whether it's a BYD, uh, a Zeekr, the other one, Xpeng, or Link & Co., or whatever other brand they pop up each and every week. It's quite astonishing how many brands they have these days. But that's the playbook. That's the playbook here. And you might say, yeah, but they steal IP. I agree. I understand all of it. But what's the point of complaining? Just be more competitive, start innovating, start moving faster, because the Chinese don't give a shit. Sorry for my French, but they don't care. Okay? They're here to compete. They're like the best capitalist communists that exist. That's just the truth, right? That's just the truth. They have been out innovating, outpacing a lot of countries and a lot of companies. Yes, it might be through stealing IP and whatnot, and it might be because we in the West wanted to build for cheap, and so went to China. That is also very true. That is also very true. But at the end of the day, they understood what was going on. They understood what was going to happen. And that's why they are where they are today. That's also why the US is still at the top today, because the US still has a lot of successful entrepreneurs, successful companies, etc., etc. Everybody wants to open their company in the United States. If you want to raise money, you go to the United States. AI startups and all of that still works. But, and this is something that I've experienced personally when I was last in the United States, is that, okay, it's great to have the NVIDIAs, the Microsoft, and the chat GPTs and whatnot, all from the United States. But when will we address the issues at the country's infrastructure layer, right? The political bureaucracy, the healthcare bureaucracy, the just infrastructure of cities and whatnot, a lot of it is extremely outdated, right? The public sector, if you look at some videos, or if you've been to Japan, or if you've been to China, or whatever, you will see the huge difference, right? You will see lots of differences in efficiencies, in cleanliness. Things will need to change, right? Things will need to change. There is also, I don't know how I don't know how I got into the discussion of communism, capitalism, socialism now, right? There is a rise in socialism in Europe, in the United States. There is a very, very good reason for that as well. So there will need to change. There will need to be some changes. Some people think, yeah, but it's going to happen. It's going to happen naturally as we automate a lot of things, as there are more robots, etc., etc. Is it? Is it? I think humans that are bored are not a good thing for society. So universal basic income and all of that, I don't think that's a good thing, because we've seen that from COVID. People, humans, need to be busy. Need to be busy. Imagine you wake every single day, you've got nothing to do. What's your purpose in life? Troll on the internet, burn down cities, cars, hate on people because you're bored. People, humans need a purpose. Of course, if you have a family and things like that, then at least you have that. I don't know. It's quite an interesting future that we are heading into. Matthew here asks, and thank you for the super chat, Nebius or Iron? I own both. I do prefer Nebius. Some people say, yeah, but didn't you listen to what the Iron guy said last week, that you don't need software? Okay, they are going the way of only bare metal. Nebius is doing and integrating software. I like Nebius. That doesn't mean that Iron is not going to be successful. I just like Nebius more. That's it. Xiaomi engineers were from BYD before. I mean, it's a big possibility. That's a big What's that? What is that doing? That's a big possibility. Um, Xiaomi is a combination. It's more also of a type of Samsung type of company. If Samsung also made cars, because Samsung is a behemoth in South Korea. They do everything. I think they even have clothes, which is quite interesting. I remember installing software to configure IP camera from Xiaomi. 2 minutes after installing, I got an email from security team that my laptop is being quarantined and I need to uninstall my first and last product from Xiaomi and other companies like Huawei. Yeah, yeah. I mean, DJI is also Chinese, and it's the most popular drone brand product in the world. But yeah, uh, I'm from Belgium. So yesterday markets were open in Europe, but then again, not that interesting. Not that interesting. Could you recommend a good Chinese technology ETF? There is a KWeb. KWeb is the iShare Cranes iShare ETF. So the holdings in it, I will show you in a bit. The market is opening up pretty soon, but we have time for that. So KWeb, here it is. Crane Shares Trust. So this is basically what it holds. Number one position is Tencent, then Alibaba, Pinduoduo, Meituan, JD Health, and then JD.com, Tencent Music. This is basically all of the holdings inside of this ETF. If you don't want to choose one company, you get exposure to most, if not all, of the. Baidu is here, yeah, of the Chinese companies. Over the last 5 years, if you invested $10,000, you would have now $6,000, 6.1. If you invested $10,000 a year ago, you would have $15,500. And year to date, up 32%, basically. Autopilot, even FSD, is going to change the game. Autonomous vehicles, you won't need a car anymore. You know, the thing with you won't need a car anymore, it's an interesting one, because I would still like to have a car, right? I don't always want to go on an app, order a car, and then go, I don't know, on a trip or whatnot with a car that's not mine. I think people still want to have that liberty of, I own the car, and so I can go wherever I want, whenever I want. You're going to say, yeah, but you can do this through the apps, since all of the cars are going to be autonomous in the future. Yeah, maybe, but I do still think that we have a couple of years, a lot of years until that happens. But yeah, for a lot of people, maybe owning a car does not make much sense. You don't need to take out a loan, etc., etc. If really the cost per mile is going to be under $1, then yes, for most people, you go to work, you call an autonomous vehicle, you go back home, and that's the only thing that you need. But again, with families, I don't know. Maybe in the future that will change. Maybe in the future you will be able to hire a car again. Renting a car, I guess, will still be a thing in the future. So yeah, obviously the purpose is to troll on the internet. Yeah, and the majority of the internet is going to be non-human anyway, so it's a very, very easy way to manipulate the public these days. Create like 1 million accounts, put out a message that serves your government or whatnot, repeat it time and time again. Also create a counter internet army to counter that argument, and then you'll have bots fight each other in the comment section below, stirs up the conversation. Humans see the comments, see the conversations. Humans start to think, wait a minute here. Humans start to act on that as well, and they could take it out on the street, and that's how you stir up violence in today's society. It's I laugh at it because I am impressed at how very smart the strategy and the tactics are these days. And I do wonder if social media companies will start to act on it in the future or not. Because I don't know, it should not be that difficult to figure out that 1 million users on your platform come from the same bot farm. Shouldn't be that difficult. Um, but in the meantime, yes, in the meantime, believe it or not, but that's the strategy right now from a lot of countries around the world. It's to create a lot of anger on social media from fake accounts, create a real discussion, humans get involved, and that's how you create also protests and maybe change of governments in countries today. I'm not making this up. It's happening. It's been happening for quite a while. Um, what brokerage account do you use? I have Keytrade. It's a bank, because my other one, which is eToro, which one where I go in and out, does not offer options in Europe. Maybe in United States, but I'm not sure. So Keytrade is what I'm using. Yes, it's a bank, so the fees are high, but it is what it is. It's either pay the fees or not, or don't do anything. And I guess I'd rather pay the fees. Matthew, thanks for the super chat again. Thoughts on Archer Aviation? We're going to have a look at it in a bit, because the market is expected to open in about a couple of seconds. So let's wait and see what happens when the market opens. Thank you very much. Yeah, the plaque is very nice on that couch. Very happy. Is Keytrade in euro? It is a European bank. So yes, but you can have dollars on it. You can have whatever currency you want on it. I run Australia, yes, but they did have that change to become a US, whatever they called it. But yes, they are originally from Australia, which is why the accent during the earnings call is an Australian accent, which reminds me of course, when Peter Beck talks, and that's quite a good thing. All right, market is open, and since Jose is not here to say ding, 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 I just said it. So, as you can, the heat map will update automatically. Voila. But on the right, you can already see quite a lot of red. Quite a lot of red. I'll give it a couple of seconds so that the market finds what the hell is going on. Why not interactive brokers? Good question. It's just a personal thing. I used to work with them for a couple of months, and that partnership did not end well. Not because of me, but I leave it at that. I leave it at that. By the way, for European users, maybe American as well, but for European users, if you have Revolut, a tremendous company, if you have Revolut, you can also buy and sell stocks there. No commissions, I think. You own the shares, so it's not CFDs or anything. For those that do have Revolut, I think it's a pretty good platform. All right, so who's green? Novo Nordisk and United Health are green a little bit right now, barely holding on. Who is red? Well, Raymond Reddington. Everyone's red here. Well, most of it is red. PepsiCo is up 5%. I do think that I've seen a big name maybe increase their price target, or maybe increase their position on PepsiCo. But okay, we don't care about PepsiCo. We don't care about PepsiCo right now. We care about the fact that Applied Digital, maybe I'll pull up the other page here. Much better. Applied Digital down 8.8%. CoreWeave 8.2%. SoFi 7%. Very interesting. Robinhood back under $100, down 5.7%. Rocket Lab at $46, down 5%. Oscar is down 5%. Reddit is down 5% as well. Reddit has been really doing very well. Very, very well. Zeta down 4%. Iron, why is it like this? Nebius down 3.2%. That's it. Okay. Nebius down 3.2%. CoreWeave down 7.7%. That's interesting. New down 3%. Palantir 2.9%. Micron also 2.8%. AMD 2.7%. PayPal, I don't know why. Why does this thing have to go down? I don't know. Down 2.8%. Duolingo 2.1%. Nvidia 2.6%. BMNR down around 2% as well. Interesting. ASTS 1.7%. Amazon 2.2%. HIMS 2%. Intel 2.2%. Iron 3% now. And so, yeah, Uber down only 1%. But it does seem like a lot of these names, we do get a little bit of buying action, but not much. So for Zeta, for example, did see a little bit of buying action. Who else? Nebius, tiny bit. New Holdings, no. Iron, a little bit here as well. Very interesting. I mean, the fact that SoFi is down 6.3%. Yes, okay, the stock has been on a tear lately. On a tear. Whatever. Very, very strange, but okay. Yeah, it's wild. But okay. I mean, if we can go lower, I'll buy a bit more. Have you thought about buying Oracle? Yes, a year and a half ago. Me and Jose were quite bullish on Oracle before it made its way up, but I never bought it. Because I was busy buying other stuff. Pepsi being bought by Elliott. Okay. That explains it. What did it do in the last? Yeah. Okay. Interesting. I mean, that's quite a lot of gaps that we're seeing here. But fine. Anything interesting already worth like jumping into right now? Probably not. A CoreWeave, yeah, but no, I mean, again, very violent moves, right, for a CoreWeave and Applied Digital. But then again, these things have gone up quite a lot as well. Like a 6%, 7%, 8% move in a day is very violent, right? But the thing is it going to be followed by another 6, 7, 8% move the next day or 2 days from now? That's when things get a little bit more interesting, right? If we go, let's have SoFi, for example. If we go here in late March, beginning of April, right? This is the tariff situation. The stock went down 37% in a matter of, what was it? A week and a half? Okay, a week and a half. 37%. That's something. So today, one day being down 5-6%, it's not that interesting. You have a week of these things go down quite significantly. That's when things get a lot more interesting. Nvidia, where was it? 1, 2. I'm back. Okay, I think I'm back. Okay, you probably missed me. But what I was saying was a very strange thing. It says reconnecting, but then, anyways, NVIDIA in one day, right? The DeepSeek drama in one day, 21%. Lost 21%. Nebius, I think that they lost 38% or something like that. Where is it here? Same thing here, from the top to the bottom, 44%. But they didn't have that much coverage here, so that gets more interesting. And Nebius here is getting quite a lot of buyers here. Okay, I'm back. Thank you. Sizzle versus Affirm. You've got, who's this? Is that Gone in your picture? GK7? Is that Gone Freaks in your picture? Profile picture. So in order to have like really, really good opportunities, one day of BMNR, Iron is green. Iron is green and BMNR is green as well. You need like a couple of days of red for it to become extremely interesting. Now we don't need 37% pullbacks, right? For specific names for it to become very interesting. But a day like today, like right now, again, maybe 2 hours from now, it goes down. Yep, that's gone. Okay, thank you. Maybe it can go. Maybe it goes down a little bit lower. Seems like CoreWeave is the one that is not really recovering that much because Applied Digital is recovering. SoFi is recovering a little bit. Oscar a little bit here as well. And so we'll see. We'll see. Nothing here screams buy. The Backstreet Boys. So Sizzle versus Affirm. I don't know if you know, but I did cover Sizzle last week or a week and a half ago. So you can go watch that video if you want the full overview, because I did touch on Affirm a little bit and the buy now pay later segment. I think Affirm is just best in class. It's of course much bigger than Sizzle, but Affirm is best in class. Sizzle has had a now still 51% pullback from its highs back in July, but it's still up tremendously, right? Still up tremendously since the April lows. Since the April lows, stock is up 231%. And Affirm did report last week, very good report, but it does seem like it's getting that Duolingo treatment where it goes up a lot on the earnings and then we go down. Affirm is also up significantly from the April lows, up 100 and let's call it 65% or so. Affirm has Max Levchin as CEO. I think it's still CEO. Very, very good leadership, very good product, very good company. Upside wise, of course, Sizzle is growing very fast, much smaller company. I do think that buy now pay later does have a future. How much market share can they take from credit cards? That's another story. So yeah, but you can go watch the full Sizzle video on the channel. Sebastian here, thank you very much for the super chat. Thoughts on ServiceNow, Palo Alto or CrowdStrike? So we have here two cybersecurity, one software name that has been getting hit but is very, very good. Depends what you want, right? Do you want cybersecurity or do you want software? Software consulting, no, not really consulting, but software type of play. It depends. None of them are cheap, okay? As you know, none of the cybersecurity names are cheap other than Fortinet. I think Fortinet, maybe Okta. It's the only cheap ones, cheap meaning pricing wise. Palo Alto, CrowdStrike, great companies. Great companies will always trade at a higher multiple than weaker companies. Palo Alto did drop here, and then we did rebound since the lows at the start of August. CrowdStrike did have that huge crash after earnings, after hours, did recover tremendously because of the comments on the 40% increase in ARR because of AI. And so that's what you're seeing right here. Now we're basically back to those prices. It was around 400 actually at the start of the day. Look, if you plan on holding this company for a long time, then yeah, pay the price. Pay the price and then dollar cost average in case you have to. It's quite interesting to see that CrowdStrike does sit right on that 200-day moving average. So I like all three. It's up to you whether you want cybersecurity or you want a software name like a ServiceNow. But none of them are cheap, despite the pullback. So that's it. Did Backstreet Boys make a a bye cover? Never know. Gold is pumping. Yeah, I mean, gold is pumping. Bonds yields are. Oops, what did I do here? Are a bit all over the place here as well. So makes sense. What is crypto doing today, actually? So crypto, Bitcoin is up 1%. Ethereum is down a little bit. Solana up 1 Doge, down a little bit. XRP up 1.4%. Gold races to all-time highs, $3,500 on US rate cuts prospects. You would think that US rate cut prospects would also push stocks higher. The Dow is down 511 points, basically down 1.17%, S&P 1.24, and NASDAQ 1.36, Russell 2000.5. The VIX is up. I told you last week VIX could be a very good, play going into September if you want to protect yourself a little bit. That's up 16% today. It's still very low. But the VIX has been low for a while. So to close it out, let's go back to our nice little heat map right here, which I'm happy I still didn't post the and still didn't make the four stocks to buy in the month of August, because it would have been quite strange seeing the heat map in that video green, and now we are here red across the board. But we are recovering a little bit, right? I mean, an iron is up 3.6% right now. BMNR 2.4%. So yeah, some stocks are down less than they were at the open. And that's what I said. It's just it's not that interesting just yet. If you look at the past week's performance, still mixed. Past month, a lot more green. And then of course, year to date, we're still doing very well, unless you're Apple, Eli Lilly, Tesla, Salesforce, Adobe, Accenture, etc. So yeah, all in all, I don't think it's the end of the world. Could this be the start of a crash? Who knows? Who knows? I think President Trump is speaking today, if I saw that correctly. We do also have, of course, inflation data 10 days from now. We have potential rate cuts, some maybe government thing going on in France, remains to be seen. Interesting month, September. So yeah, make sure you have some cash on the side in case you want to take some opportunity or take advantage of the opportunities that the market presents to you. Dogecoin exists solely to Elon Musk. I mean, I regret selling my Doge, but I did buy Doge back in 2018. And I don't think that was that popular back then. Should have held it. I probably still have some altcoins in some wallet. The problem is I have no idea how to access those wallets. So that's the thing with crypto. It's those annoying 20-word passwords and whatnot. It is what it is. Which stocks will be included in the S&P 500? I mean, for the Robinhood shareholders that have been waiting for the last 1,000 times that stocks get included in the S&P 500, I truly hope that this time is your time. Although it doesn't really change that much. Just from a recognition perspective, yes, Robinhood entering the S&P would be great, of course, since this is again a retail-led rally. But I don't know. I don't know who's going to be included. Robinhood will eventually be included. SoFi will eventually be included. When? I don't know. But again, it's not a question of if, it's just a question of when. With that, I'm done talking right now, but I will be back with my video in about a couple of hours or so. I'll basically repeat in short what I said at the start of the stream, go over 4 companies. We didn't mention all of them in the live stream because I do want to have a little bit of a surprise, And yeah, that's about it. We'll see each other in the next video or tomorrow morning, same time, live stream. Whoever's still watching, whoever's following the US Open tennis, who takes it? Djokovic, Alcaraz, Sinner, maybe Fritz? Let me know in the chat. That's about it. We'll see each other in the next one. Thank you all for, spending your time with me this fine morning, afternoon.